Hello, welcome back to this amazing series on Velvet Forex Trading Scheme for 2025. Okay, this trading scheme is fashioned for both beginners and advanced traders. So let's go. And for today, we'll be talking about what time does this setup form. So I want you to help me do something. If you've not seen the previous videos, the first, second, and third video, this video might not be useful to you. So I advise it's ideal to go and check through those lessons. Now I'm going to do everything from TOP. So everything we talked about in previous videos, I'm not going to talk about it again. I'm just going to go through the process right now. So I wrote down some things, so take note of this. So the first things you want to take note of is you want to mark the higher time frame PD arrays. So, and I talked about PD arrays such as Fairvalley Gap, highs and lows. But for this particular model, we are going to be focused on FVGs, the Fairvalley Gaps. Then we also transpose to the next time frame. Then we'll look at for 1 a.m., 5 a.m., and 9 a.m. These are the times of the day when this setup form ideally. But then this 1 a.m., 5 a.m., and 9 a.m. is not as regards to CRT, no. And you're going to see what I'm talking about right now in the chat. So let's get on. Like I said, I will not explain anything. I'll just go ahead and do this. So this is the present price leg. And on that present price leg, the first thing you want to do is you mark the high. That's the first thing. Okay. Once you mark the high, because it's a bearish price leg, that's why we're starting from high. If it were bullish, you start from low. I don't want to go ahead and explain those things in detail. So the next thing I can see here is the fair value gap, and this is a monthly fair value gap, so I'm taking note of that. And then I can see a potential fair value gap, but you don't mark a potential, which means it's yet to form. And this is a potential low. I can't mark it because it's still yet to form. Or even if I mark this potential low, I'm not going to take it much important, so I can still mark it. So on the present price leg on the monthly chart, I've been able to mark out certain things that'll be very helpful. Then I'll transpose to the weekly chart. So right from the monthly chart, we now go down to the weekly chart. So right here on the weekly chart, we can see more fair value gaps, and we're going to also take note of those fair value gaps. So the next thing is on the weekly chart, I have this. I'm going to change the color to maybe yellow. Yeah. Another one here on the weekly chart. There's no fair value gap here. There's another one right here. Quite small, right? But we can still take note of that. And then another one is here. Okay. Yeah. Okay. So look at this. Now we had the monthly fair value gaps, which is this one basically overlapping with this weekly fair value gap. This is a very beautiful will I say scenario. So I want to see the fair value gaps overlap. That makes a whole lot of sense to me. Now look at this. Once we have this expansion downwards, all we're waiting for, because once this expansion starts, most people will start selling. That's not appropriate. What you want to wait for is for price to retrace back into this fair value gap. Then what do? You short from there to continue. I don't know if that makes sense to you. So at this point now, you see price is retracing. The best time to sell is at this moment when it's coming back to this very point. Then you can start selling. Yes. Okay. Now ideally, let me show you this. Ideally, look at what's happening in price action. If we are in a buying situation, then I'm going to reverse it. So ideally, want to see price go this way. Price will go up, retrace, right? Go up again, retrace, go up again, retrace, and go up. This is a bullish trend, right? This is what you want to see. So making it so simple for you and all that. Okay, so this is a bullish trend, but this will not always happen. Sometimes you have a situation whereby price will come and take away this low. This is a stop hunt before continuing towards the upside. Yeah, sometimes you can see it this way, sometimes you can see it, but oftentimes price might come back and seek the liquidities down here before continuing uptrend. So you're going to see this happen in price action, and we are still going to talk about this in this model, how we can expect such kind of situations. That is when we talk about incorporating the economic calendar. We're going to see how it works. Okay, now this is one thing I want to take note of. One, another I want to take note of before we continue is when price is moving in this very format, every setup should be aimed at, okay, let's say, let me put it this way. When a setup forms on a particular time frame, then the profit and the stop loss should be also aligned with that time frame, which means if a setup forms on the weekly chart, the profit and the TP should also work with a weekly range, which means it's going to be bigger both in profit and both in the stop loss. Then if it forms on the daily chart, same, 4 hours, same. Don't know if you get now. But why we transpose down to 4 hours is that the 4 hours setup tend to form faster than we see in the daily and weekly and monthly. So we can ask, I don't know if you get, cannot be out of the trade, because if you trade only once a week or in 2 weeks, that might not be good. I don't know if you get now. At least you want to set up for that can form at least every day, twice, once in 2 days, that kind of stuff. So that's how we trade off the 4 hours chart. Okay, so we've marked out everything on the weekly. So just before we continue, let me go to daily chart. Yeah. So on the daily chart, we have say this is our focus for the month. I want you to also see that we have some overlapping situations here, whereby look at this on this daily chart. You see how price, this fair value gap on the daily chart aligns with the weekly fair value gap, this particular one. Let me zoom in so that I can see. So this daily fair value gap, watch, overlaps here. Now watch, at this point, for the first thing I want you to look at is whenever price thinks back into the fair value gap you've marked, the next target is what? This expansion candles low. If it's a bullish scenario, it's the expansion candle high. Okay, before we start going to target, because a whole lot of you is already getting so many things confusing right now, but just bit by bit, bit by bit. So I want you to take a look at this. 1, 2, 3 is the fair value gap, right? At this point, we have price stinging into, this is the first time price stings into this fair value gap. That was the first time, the very first time. Okay, so that was the very first time price sting into the first gap with this particular bar, right? Sting into it, and then we saw a what's it called, a reversal, like a retraced thing, saw it going down again. I will talk about all these scenarios. We're going to talk about all these things now. So let's still go back here. There is no daily fair value gap here, yes, but there is a weekly fair value gap there, right? So I want you to watch at every point, because now watch at every point when price stinged back into the fair value gap. I want you to watch that very point. Focus on those very points. Yes. Okay. So I think right here I'm okay. Okay, another one I want to also notice. Let me note some swing. Let me note, because we talked about some swing being key levels as well. So I noted this one. Then okay, I can also note this one, but let me still note this. Yeah, that's the swing highs and the swing lows. Okay, let me, these ones that are swing high and swing low, I will change them to another color. So use purple for them. But my major interest is these ones that are black. Yeah. So even here, those points where we saw price stinging back to the fair value gap and then reversing or retracing, want to check out for those time frames. You understand? So let's now go. Okay, this one is meant to be black, and this other one is meant to be purple. So right now let's transpose to 4 hour time frame. Okay, now I don't know if you followed closely how we are able to arrive at this point. Now I want you to look at something carefully. Now this is 4 hour time frame, and I told you that in this lesson our focus is discussing when this setup forms, the time when they form. So The time frame when they form I gave you is 1 a.m., 5 a.m., and 9 a.m. So let's see, watch the time here. So if you can see down here, if you can watch, follow this vertical line, go all the way down, just that bar is 1 a.m. Thursday, 12th December 2024, 1 a.m. Watch the time frame. Okay, watch this time frame again. This is 5 p.m. Take note of that. 5 p.m. is not in the time frame I gave you, which means we do not have an entry on this model. Yes, follow me closely. Right here, what's the time? 9 a.m. That is an ideal entry for us using this model. Watch this time frame. 1 a.m. Remember, 159, an ideal time frame using this model. So let's come here. 5 a.m. Let's come here. 9 a.m. So for this one that's formed at the wrong time frame, I'm going to color it white, telling you that this is not our setup. So which simply means that in a bearish scenario, so I'll give us another sketch to help us. In a bearish scenario, look at what we want to see. Price expands, go high, expands again, go high, expands, go high, expands, go high, expands, go high, and then expand. So I might change this to blue. I think green is fine. So look at this now. When price, this is a bearish scenario, a bearish tone, a bearish price leg. Yes. Now in this bearish price leg, where is price retracing back to? Price is simply retracing back to an area of fair evaluation, which is the fair value gaps we see. So this is what we want to see. The price will retrace back to a fair value gap at every time. So which means if the situations are ideal for trading, we want to see price retrace back to this place, and that is what we want to always see. Don't know if this is making sense to you. So this is what we want to always see. So once price retraces back, it now goes down. This is it. So I don't want to keep this lesson so long. We're going to still build on this more. So what is happening now? Remember, there's some situation whereby price will go all the way up here before going down. It's going to happen. And I look at something I also want to take note of is that every fair value gap is stronger when it's the higher time frame. So a monthly fair value gap is stronger than the weekly. Same, the daily is stronger than the 4 hour. So price will always come back to those fair valuations and then continue going down. So this is going to happen in a bearish trade, and it's not going to happen randomly. Ideal time is within the period of what, 1 a.m., 5 a.m., 9 a.m. because this is the London and the New York area Q zones trading sections whereby we have economic calendar and high volumes, and this is what we want to see. So we're going to build more on this. For now, let's keep it simple, and thank you so much. Please check the previous series and also join us next time. Like, this is going to literally move you from trading to profitability. Thank you.